Hello. A very good evening to all the participants today. Uh, and a hearty welcome from Vakilsearch and Growth 91 for today's webinar. Today we have Mr. Sanjay Sarda, who's the founder of Growth 91 with us. And we hope that this will be a terrific start for all the startup ecosystem entrepreneurs to take a part in this webinar and understand more as to how they can grow their startups and very particularly about how they can do the fundraise for their startups. A very welcome to you, Mr. Sanjay. Thanks for joining with us.
Thank you, Antim.
So, a little bit about Mr. Sanjay Sarda here. Mr. Sanjay Sarda is the co-founder of Growth91.com. Growth91.com is a platform where you can raise funds and you can connect with anybody who is willing to finance to your startups through various sources and various methodologies. Mr. Sarda is an alumni of IIT Kharagpur and IIM Ahmedabad and has more than 28 years of experience of having worked in various corporates across India and US. After that, he's also a certified corporate director by Indian Institute of Corporate Affairs, and he's an active angel investor with having a portfolio of more than 50 plus startups. That gives us an immense pleasure and the proud opportunity to host you for this webinar, sir. I once again welcome you to this webinar and thank you for joining. It will be great if you can introduce a little bit about yourself and Growth 91.
Thank you, Antim, and thank you, Vakilsearch, and I welcome all the participants who are listening today. It will be a great pleasure to interact with you and try to share whatever we have learned over the period of so many years related to startups. About Growth 91, before that, I will just quickly tell what we do. Basically, we are here to help the startup ecosystem as a whole. So we help the startup founders from idea validation to helping them to go create their product, identify the market fit, fine tune the product offerings, reach the MVP stage. And once they reach there, help them make investor ready. So make the business investable. Then we arrange the funds for them. And after arranging the fund, we help them to execute whatever plans were committed or planned. So post-funding support. So end-to-end, all the facilities we provide. And what we have identified, the couple of challenges here are there as the economy is booming, startup, everybody is talking about startups and all. Everybody want to participate, but it's a great challenge for both the people. Startups are not able to reach the right set of investors, and investors who are interested to explore the startup ecosystem, they find it difficult to reach the right startups. And even if they reach it, it's very difficult to take decision because there are no external validation or support on evaluating the deals and understanding it. So we can talk about it more detail during this session, how we do it and how we help. But that's what Growth 91 does. We list the startups, and there are investors who come and see. We provide all the information and help them throughout their journey. And with the end-to-end digital experience, the investment happens in startups, starting from your KYC to document signing to getting the updates on the progress of the startup. And end-to-end, that's what we provide at Growth 91. And one more important thing, it is addressing both the set of investors, somebody who want to invest large amount. At the same time, somebody just want to start with rupees 5,000 for rupees 5,000 in Indian currency in Indian's startup ecosystem.
Okay, that's really interesting to know from you. Now I'll pick from where you just ended the note. The discussion where you said that usually, as we know about venture capital firms or alternative investment firms, their ticket size starts from, 1 crore or more when they raise from LPs and limited, partners and all. So how does Growth 91 work in that case? So far, for our audience, we have understood that Growth 91 is basically a platform as simple as YouTube or WhatsApp, where you connect from to one another. Growth 91 is exactly a platform like that, where anybody can connect to an investor. And who is that anybody? Any startup or any entrepreneur having an idea, business model, and we'll explore how the startups are selected. But basically, to explain you Growth 91, it's a platform where any entrepreneur or startup can connect with the investor. Now, coming to your question, sir, you just mentioned that any investor can join. So basically, we're talking about, let's say, even if it is a retail investor, or even if it is a somebody, some HNI or angel, anybody can invest into Growth 91. So how does that happen? What is the average ticket size, or average amount anybody can invest into Growth 91? And yeah, and how does the investor profile look like? Like, can I as an investor invest into Growth 91? Is it that easy? That sounds interesting,
Yes,
sir. Please.
absolutely, Antim. I mean, it is that easy. Like, I mean, anybody, even anybody after more than age of 18 years, he can just sign up, log in, and start investing. It's like, I mean, 2 minutes, you just create your profile, I mean, sign up, do the KYC, and using payment gateway, transfer the money and sign the document. The process happens in like, it's all 2 minutes. But I mean,
Okay.
ideally, what we suggest, like to all the audience, all the investors, and everybody in the ecosystem, like, I
Mm.
mean, anybody and everybody who wants to create wealth or who are investing, maybe in the stock market, in the stocks,
Right.
bonds, FDs, or real estate, or anywhere, they should have
Mm.
at least 10% of their investable funds parked in startups. That's how wealth can be created. So, like, I mean, yes, invest in stocks, invest in mutual fund, invest in real estate, invest everywhere. But whatever you are investing, out of that, minimum 10% should be allocated to startups for real wealth creation. So these are our target set of audience. Now, coming to ticket size, again, the ticket size is variable from person to person. So, like, I mean, if somebody want to allocate, say, like, I mean, 1 lakh rupees a year, he is most welcome. Somebody want to allocate 10 lakh rupees a year, he is most welcome. Somebody
Mm.
want to allocate couple of crore rupees a year, he is also most welcome. So
Mm.
technically, we don't restrict from platform point of view. We just advise investors to invest based on your own personal budget and planning, and invest up to 10% of your wealth in startups.
That's great.
And to your second part of your question, like, I mean, we do entertain large investors as well, and small investor as well. So when I say small, we facilitate investment starting 5,000 rupees. If somebody just want to invest 5,000 rupees in a
Mm.
startup,
Mm.
and if he like the deal on the platform, he can invest that.
That's great. So there's a lot of awareness, I feel, when it comes to investing into capital markets or securities, which is basically through investing through various apps that have become really popular, and retail investors have increased post COVID, right? Where they're investing into the stock market, and they are, very, very interested and curious about it. So how does one invest into private equity, something like into startups? Because if they're not registered in stock exchange, through Growth 91, we understand we can. But how does that process work? For stock investors, there are awareness things happening and every other things happening. How am I as an investor supposed to invest into, how can I plan it, my investment into startups?
So that's what I'm saying. So it's very simple. So, like, I mean, even if you invest in stock market, you have to open an account with a broker,
That's correct.
whether it's online or offline. And then you
That's
have to
correct.
do the KYC, whatever is specified by the compliance authorities. So
Right.
that is like process, but that is minimum required to invest any thing in stock market. Same is the case with startup investment. So if somebody want to invest in startups, they can just sign up or create an account at Growth 91, which is free of cost. There are no charges for it. They have to do
Mm.
the KYC. So when I say KYC, naturally, I mean, this is all a legal investment. There is no cash component here. Everything goes on records, everything is documented, and everything fair and legal. So technically, we want to ensure that the person is real, person
Mm.
is genuine, and the amount is coming from the real bank account, not like
All
any
right.
illegal things. So basically, what we validate is like we check the PAN number of the person, we check the
Mm.
Aadhaar card of the person, and we check the bank account of the person. So when I say we check the bank account, so actually it should be a real bank account. So how it happens, like, I mean, we just ask the user to enter the PAN number. There is a government database. Automatically, within fraction of second, that PAN number is verified and the name is cross tallied.
Mm.
Aadhaar number is verified in the similar way, and
Mm.
a bank account number is verified by dropping a single rupee penny drop, what we call, in that bank account to test whether that bank account is genuine and real or not. So these three
Understood.
things are verified, the user is ready to invest. Now we share few questions with the investor to just to make him aware, like, I mean, where the person is investing. So we just try to tell him, like, what are the startups, what is the risk involved, what are the standard disclaimers, like, I mean, whether he understand the startup ecosystem or not. So there are few simple questions, and we just ask them to read it. That's all. That will take another 10 to 15 seconds. They have to read the questions, say that they understood that the startup, they are investing in startups, and say, okay, they are ready to go for startup investment.
That's great. That's really startup investing made very very simple. I feel if
Yeah.
I have to, if all the investors that are interested have to know more about the startup ecosystem, because let's say if I'm investing through a stock exchange, we know about the capital markets and what is happening. So, as per your opinion, what kind of how is this ecosystem coming up? The Indian startup, we all know that they're doing really brilliant. There is a lot of excitement about the startup ecosystem these days, but what kind of investment opportunities does it offer, and what kind of growth in general? If you can share few couple of words about that, that will be great.
Perfect, perfect. So see, basically, startup is nothing new right now. In India, it is growing in recent times. But if you see the Silicon Valley in US, I mean, is even since last 20-25 years, the startups are there, and they are making great wealth. So, like, I mean, we know Amazon or even Airbnb, and all these were startups. They are like
That's right.
multi-billion-dollar companies now, but they were all startups. Same
Hmm.
way, like in India, naturally this ecosystem is growing faster in last 4-5 years. Definitely, sometimes a government support is needed to encourage the thing, and that's what it's happening in India right now. And you might have seen from the recent media news and all, somebody says India is at number 2 in the world now in startup ecosystem. Some agencies rank India as a number 3 in startup ecosystem. So basically,
Wow.
somewhere in the top 3, India is ranking in the world right now as far as startup ecosystem growth is concerned. And second is, it is real. I mean, it is not hypothetical, because real money, real wealth, real everything is created. And not only money, real products are being created, real services are being offered through startups. So all the businesses which are like coming as a unicorn or becoming big, they are real. It is not on paper. So I mean that growth is real. That's what I'm trying to
That's great. So if I have to simplify this entire scenario for our viewers,
tell. Mhm.
will it be right to say that, imagine if Facebook is currently, or a startup like Facebook is currently starting up here in India and is listed on Growth 91. If I invest in that startup, and let's say, like just like Facebook listed on a stock exchange and gave immense, maybe 100x or 1000x returns to its startups. If I am investing to a similar startup here in India, where I believe and I really like the team, really like the startup, and when they list into stock exchanges in India, my returns will be maybe equally or good or better. Is that what we can expect as investors into a startup?
Yes, yes, absolutely. You're right. I mean, that's what an investor can expect. But basically, what happens? See, companies when they go to stock market at a listing
Hmm.
stage, that is a really advanced stage. When we talk
Right.
about startup, and why the startups are more interesting, because they come at an idea stage and a very early stage.
Yeah. Very very
So
early. I
somebody
understand.
has an idea, somebody has a product, and he has not sold it to billions of people, like, but idea stage, and that's how they come to a smaller set of investors. They
Hmm.
validate, get the idea validated, some from experts or somebody who understands it,
Hmm.
and that's how they take money as an investment and grow. So somebody invest at this, like, let's say Facebook like startup registers on Growth 91, somebody invests there in it at the early stage, and
Hmm.
naturally if they perform what they have promised and they are growing, naturally in 3 to 5 years they will be on the stock market, and whatever great returns are available, that will be available to all these investors. That is one thing. But what happens in startup, usually the ecosystem is now getting really good maturity. So I mean, it does not happen like somebody say comes and say give me 10 crore rupees and people will give him 10 crore. It is not like that. So whenever some startup is taking money, the money is given for some 15 to 18 months or 24 months kind of expenses. So
Understood.
whatever the real need of money, that much money is funded. So they have
Hmm.
to first present, I mean, why they need money, what they will do with that money, and how they will grow. So only that much money is available to them in the whatever funding round. So they execute that, and if they execute it well, naturally the business must have grown. So
Okay.
the value of the company will grow. So
Okay.
now next set of investors will come, they will invest, and that time there are two possibilities for these existing investors. They can get an exit. So like, I mean,
Right.
somebody want to say, I invested 50,000 rupees right now, and after
Hmm.
12 months, my money has become 2 lakh rupees, and I'm happy to take 2 lakh rupees. I don't want to wait more.
Hmm.
And there are more investors who are coming in that time. So the current person who invested 50, he can take 2 lakh rupees and take an exit. And that's how, like, I mean, small investor go, large investor come, then that large investor go, even the larger investor comes, and
Correct.
that's how the company becomes big.
That's great. I think people who are associated with private equity understand this how this works. But for our viewers, we would like to clarify that exit is an event where the existing shareholders of a particular entity or particular company can exit from the cap table or the shareholding table of the company by selling their shares with or without a profit. But usually, in the case of a profit, by selling their shares to the incoming investors. So that event is usually defined through proper agreements and shareholders contract, and that exit opportunity is something that gives you very high returns at times as well. So all right, sir,
That's
so we'll move.
perfectly said, Antim. Just to add to it, to or more further simplified, see somebody buying a share of, let's say, Reliance in stock market today.
Hmm,
Naturally, how the person will get exit? He has to sell his share to
right.
somebody. Then only he
Hmm,
will get his money back. The same thing happens in startups. The
hmm.
share has to be sold to somebody to get the money back. Or
That's
if the
perfectly
company is
right.
becoming very big and buying back all the shares, the same thing what happens, you might have seen share buyback offers in stock market regularly coming for large companies. The
That's
same
right.
way a buyback offer can come from a startup.
Right.
It works exactly same as a listed company, only thing shares are not listed in stock market. And
That's
that's
great.
where the platforms like Growth 91 are of help to investor, where they provide the opportunity to identify good deals and invest.
That's great. So here's another request to our viewers. If you have any questions that you would want us to be answered in the FAQ section, then please keep shooting those questions and posting those questions in the comment section. Also, here's another interesting question to all our viewers. When you're watching this video, if you are interested to know more about the public market versus the versus the private market, please post in the comment section and let us know, and we'll make another video on public market versus private markets. All right, sir. So thanks for clarifying that. So Mr. Sanjay will go to the next question. We'll probably come to the the companies private companies and the startups and the entrepreneur side. Now we'll understand how they can benefit from a platform like Growth 91, right? How they can list themselves on Growth 91, and what benefits can they get from a platform like Growth 91. So my first question will be as simple as, how does Growth 91 select startups? Is there any selection criteria at all? And then probably we'll move to the listing procedure, how one can list themselves on Growth 91.
Absolutely, absolutely. There is a selection criteria and very, very rigorous selection criteria, because you see, it's not like just a matchmaking kind of thing that somebody will list and somebody will invest.
Hmm.
Because ultimately, although it is investor that takes the decision with his old sole due diligence and understanding everything, we take the moral responsibility of presenting good deals. I mean, wherever we feel that this is something investable,
Hmm.
that only we list here. So technically there are multiple level of scrutiny. So like, I mean, and of course there are a lot of ways we source the deals. So somebody comes to us for, let's say, for saying that they want money for their startup. So we
Hmm.
evaluate them. There are multiple level of screenings, like quick screening, where we just quickly check, I mean, what the startup is, whether they fill in basic parameter of fundraise. So I mean, whether it is a private limited company or not, whether the founders full time or not, what kind of product they are doing, is it immediately appealing or not? Like, I mean, whether we see some connect with the market or not. So the quick things we check. Once that is passed, then we go for a detailed evaluation. So we talk to the founder, we interact maybe one time, second time, third time, as many number of times. If required, we do meet the founders also. We try to understand their vision, understand their passion, whether and then so there are sometimes the technical products where we need to take a help of technical expertise in that specific subject matter or a specific domain. We do take that evaluation, and when everything is looks okay, like from the founder's commitment point of view, state of the startup, valuation, and everything, if looks acceptable, then we decide to list that startup.
Okay.
And post that, decision also, there is that's only a decision to list the startup. Suppose that decision, naturally, we appoint an independent due diligence agency. So, which could be a CA firm or a legal firm or some technical firm, depending on the domain. And then they independently evaluate all the numbers, financials, data, whatever is available information and whatever is presented information. And they provide their detailed independent report, which we call due diligence report. And if the due diligence report does not have any major or any red flags which needs to be taken care, then we list that startup on the platform. And of course, this due diligence report itself as is available to all the investors. Although we have carefully selected that, but we make that report also available to all the investor to see before they invest it.
All right. So I think the due diligence report ultimately helps both ways in, letting the startups know what are the shortcomings in the startup, startups reportings, compliances, and everything. And then it also helps in, reducing the time taken in connecting with the investors, convincing them on various due diligence and all of those stuff. I think then that's great that you answered all the two questions that we put.
Antim, I would just like to add there one more thing. So, we have another proprietary thing here. So when we talk about startup or any business, usually the personal chemistry and their relationship and their balancing in the skills and everything matters. So we do take our proprietary inputs from all the founders, their core team members, their advisors, everybody, and our algorithm checks it, how much they know about each other. And we evaluate whether they are talking truth, they are lying, whether they know seriously each other or not. And all these things also we map before taking a decision of listing a startup. So that's something unique we are doing.
Okay, this is a really interesting, sir. So you're saying that Growth 91's platform also offers, curated services, software as a service kind of model, wherein I can get insights as a user, being an investor or as a being an investee, about my interaction with the startups, or of my interaction with the investors.
No. So I will just clarify what I'm saying. So before listing a startup, technically what happens if, let's say, there are 3 co-founders. Ideally, if these 3 all share the same vision and they understand each other, then only they can continue for another 3 to 5 years. Otherwise, they will start a business and after 6 months, they may fall apart and the business will collapse.
We see a lot of
we
such
also
cases.
try to take care of that, whether they really understand each other or not. That proprietary tool we have developed where we take the inputs and take the decision on that
before listing. That's fantastic. I think that can be a game changer for this private equity industry, as we know. So if after the selection criteria, now let's come into the next section in the chronological manner. Let's say if I'm listed on Growth 91 as a startup, how does my journey look like after that? Like from listing, how does Growth 91 help me in general? How does Growth 91 help me in reaching out to the investors? What is the process? How do I raise funds? Right? Any insights on that?
No, it's very simple. So, once you approach, once it is selected, shortlisted, and we are good to go, then we go with the due diligence report, as I mentioned. If due diligence report is positive, then it takes another 1 day to list a deal on the startup platform. So, presenting all your information in a presentable form, which is easily understandable by the investor. So we structure that information and present it to investor, and based on the date decided, the deal go live automatically. And there is a standard system set, like, I mean, there are registered investors on the platform. We know, based on our algorithms, like which investor like which kind of deals. So we do show these deals to these investors that XYZ kind of startup is available and they are doing so and so thing. Rest all information is available on the platform. Some summary we send by emails to investors, and other promotion, whatever is appealing or acceptable to investor, we do that to communicate the deal, and investor do see that deal and invest based on their further review.
That's great. I think it's really heartening to see the kind of innovation that is coming for the startup ecosystem in India today. And I'm sure the Indian startup ecosystem is very much mature and ready for such innovation in the startup ecosystem practice. So if you're a viewer watching this, uh, then and if you're an entrepreneur with some idea or some startup, and you are not connected with Vakilsearch and Growth 91, then you're really wasting your time. And if you want to connect with us on Vakilsearch or on Growth 91, please comment on the comment section and let us know, and we'll get in touch with you. All right. So, Mr. Sanjay, moving on to the next questions. So far, we have understood how investors can invest into Growth 91 and how startups can get investments from Growth 91. But I'll trace back to a term that you mentioned in the introduction itself. You said that you help startups become investor ready. So, what is the meaning of this term called investor ready? Some entrepreneurs that we have interacted in the past find it, kind of difficult or confusing at times to understand what exactly does it mean by investor ready. We all understand that it's a variable, but if you can help us understand it more from your expertise, that will be great.
No, so when I say investor ready or investment ready, it's like, I mean, whatever business a startup or a founder say, I mean, they may have an idea, they come up with an idea and they want to build a business out of it. So
Yeah.
naturally, what investor look into the business?
Hmm.
That's what has to be incorporated in the business model. For example, some business is profitable, but there is no visibility of scale. The
Okay.
investor may not like it because that may remain like a proprietary kind of business. The person will keep earning his salary and reasonable profit, but that will not create great wealth for the investor. Secondly, most of the startup investors, they are high risk takers. They are okay to lose money if something does not go right, but they want great wealth if it works. So at least there should be a possibility of 10x growth. So if I invest 100 rupees today, it should have a potential to become 1000 rupees. If that potential is not visible, then that becomes a challenge to invest in that startup from the investor's point of view. So we see to it that the business model, if that fits that, fine. If not, is there any possibility to restructure the business model, restructure the product offering,
I
or
mean, you
pivot
mean
the
pivot?
business model to something different which can be scaled up, which
Okay.
makes it appealing to investor. That's what we call making them investor ready. That is a primary thing. Second thing is, like, I mean, somebody may have a great product, even that is scalable, but person is not ready to communicate it well.
Hmm.
So unless it is communicated to somebody who is talking to you, I mean, these people may not understand what you are doing. So that communication thing, we try to help restructure and communicate the value proposition in a right way. So these are the things we try to help them, make them presentable or investor ready.
That's great. I think that was easy. If I have to break it into various steps, what Mr. Sanjay was saying. So, as a part as a part of Growth 91 ecosystem, you get nurtured a lot about the startup lingo that VCs understand, what criteria they're looking for in terms of investment, and how you can create the maximum chances of investment into your startup. That's where Growth 91 helps with the startup entrepreneurs and the startups. That's great. So to to ask our viewers to keep adding your FAQs in the FAQ section so that we can take it up during the FAQ session. Moving on to the next question, which is also a very interesting question for me personally, as to if I'm an investor on Growth 91, without going into the very technicalities and into the the compliance language and all. How can we understand as an investor in Growth 91, How do I get my shares into the startup? Is it something that I get by default of being invested in Growth 91, or do I get directly the shares of a particular startup? How does that happen?
See, basically, whenever the deal is listed,
Hmm.
agreement will be signed after your investment. But basic deal terms in a simple format, in a very crisp one-page document, we provide this on the along with the deal for the investor to read. So they know what all they are investing, what value they are getting, what kind of document they will get,
Hmm.
and what kind of exit or what are the terms conditions that are agreed for this deal between the founder and the investor. So that is available with the investor. After that, they sign the document. After the investment is complete, they sign the document with the founder. So startup sign a document and the founder sign it. The startup founder sign it. So that remains as one of the document for their as a proof of their investment. Next is like depending on the instrument. So currently what we are raising fund, maybe we're using CCPS or CCD. That is what compulsorily convertible preference shares or compulsorily convertible debentures, which are legal instruments where a private limited company can take money from investors. So
Okay.
both these things, I mean, there are certificates issued by the startup in the name of investor directly, and that these certificates will be given to the investor in a physical copy.
Okay. That's great. So, for our viewers to understand, preference shares or debentures are a kind of instruments which are not exactly equity shares, but a hybrid instrument, we can say, and these are proper legal instruments as defined under various laws and especially the Companies Act of India. So, to know more about preference shares and debentures, you can explore our website of vakilsearch.com or post in the comment section, and we'll get in touch with you to explain it. All right. So now we understand that if I'm an investor in Growth 91, then after there is a specific summary sheet that I get to understand the terms between the startup and myself, and also after a particular agreement is signed, whether it is in the form of preference shares or debentures, then the share certificates are issued to me. Now we understand that. Now following further, if I'm investing into Growth 91, the valuation and the terms are pre-decided by Growth 91 itself, or what kind of assistance do I get in understanding and doing the due diligence, which you mentioned that you do a due diligence, but it will be great if you can explain how does that due diligence process work, how long and what time does it take, and how, as an investor, what do I have to do in this?
Right. So as an investor, you don't have to do anything. As far as valuation is concerned, that is a discussion between our experts team and the startup.
Hmm.
So it's a mutual understanding which deal is acceptable to in the market. Like I mean, see, basically, any startup can come and say that they want $10 million valuation or 100 crore valuation.
Right.
But whether that really is worth 100 crore, what is the basis of this 100 crore? Can it be cut down to 50 crore or 30 crore or 20 crore? So that
Hmm.
is like, I mean, we come to certain benchmark which is acceptable to the ecosystem. Or as a from an investor's point of view, that valuation is logical and acceptable. Once that is
Okay.
agreed, that valuation is fixed for all the investors investing on that specific round.
Hmm.
So that is not changed investor to investor. It's not negotiated. That's why the negotiation happens. That is told to investor that this is what the valuation is, and then
Okay.
investor take a decision on investing. And about the due diligence, I mean, see, I mean, we do due diligence on multiple things. Like one is like a financial due diligence,
Hmm.
where we check whatever numbers, balance sheet, revenue numbers, or whatever their expense numbers. If it is audit, I mean, if it's a couple of years old company, then audited balance sheets, compliances, all these things. Then there is a secretarial and legal due diligence where we check, like, I mean, whether they have maintained the minutes of the books board or not, whether all MCA or ROC compliances are done on time or not. Is there any defaults they have already done? Whatever charges they need to create it on the assets or any loan, debentures, whatever, whether that is done appropriately or not. So all the things which are required, whether they have complied or not, that is taken care of that. Third is like business due diligence. So where we evaluate the business proposal, whether that idea itself is valid or not, whether that idea itself is scalable or not. and what is the overall value proposition there. So all these things come together, and that's what form a due diligence. And again, that will vary depending on stage of the startup. If some startup had just started, let's say 6 months back, they may not have audited financial balance sheet. But some startup which has started 1.5 years back, we see their last financial balance sheet, whether they have filed it up to date or not. Everything is there in order.
Okay, that's kind of simplifies it and then clarifies it. Now, one follow-up question to this particular question is: if I'm a startup listed with Growth 91, do I get help in arriving at this valuation? We see several TV shows these days focusing on the startup ecosystem, where there is a lot of negotiation between investors and direct live pitching. Those kind
Yeah.
of scenarios are happening. So I think our audience is getting smarter in that space and understands how it works. But if I'm working with Growth 91 as a startup, as an entrepreneur, do I get assistance in terms of understanding valuation, how valuation works properly? Do I get assistance from
Absolutely, absolutely. Yeah, absolutely.
understanding how due diligence and how to prepare for it?
No, so for valuation and all, absolutely all help is available. So I mean, we do discuss, and wherever something is going off the track, we try to explain why the right valuation logic rationale is, and try to explain. And now we try to balance both the things. See, for example, some startup is asking irrational valuation. It is impossible to find an investor. So we try to bring them back to a logical, rational number so that investor find it appealing. Second
Hmm.
is like, what if they take too low valuation? So like, I mean, they dilute too much.
Hmm.
So naturally, we also try to protect the founder's interest so that their skin in the game is realistic, and they try
Hmm.
to continue to drive the business
Hmm.
for in the interest of investor, because ultimately investor will make money if the business is surviving and business is growing. So yeah, like I mean, if you see on the TV show, sometimes what happens, the startup is asking for 30 crore and they come down, cut down the valuation to 3 crore, saying that they are offering a great help.
Hmm.
On some reality show, that is okay, because naturally they get a lot of branding, marketing, and visibility, which is free of cost there. But
Yeah,
otherwise, if I cut down the valuation to a very, very low number, and the founder does not have any reasonable number of share, why will he work?
that's true.
So
And
we try
even
to
as
balance both.
yeah, and rightly said, sir. And if, as it is said by some famous person, like reality shows are never real. So yeah, going from taking a cue from there, we can understand. But for the viewers, I can understand that one thing I have to say is that there's a lot of things to learn if you're an entrepreneur. Apart from focusing on your business, on your sales, on your growth, on your marketing, on your recruitment and everything, managing your funds and especially private equity these days can be challenging. But rest assured, there are platforms like Vakilsearch and Growth 91 to help us in your in your path and in your journey to become a successful entrepreneur that you are probably seeing on these reality shows and everywhere on in the media in the Indian startup ecosystem. So that being the case, uh, I think we will. I think we have reached the time for understanding and taking up some FAQs that are there. But before we move to FAQ, um, there is one request to all the viewers who are joining with us live, that keep posting more and more FAQs so that we can ensure that all those FAQs are answered in this particular session. And any other questions that we may not be able to take it up, we'll ensure that we reach out to you and we address all those questions. Uh, so now we'll be taking the first question from Miss Shakshi Gupta. So Ms. Shakshi Gupta is asking, what is the expected rate of return? And now, expected rate of return, uh, I think she's asking from the perspective of being an investor in Growth 91. What can be the expected rate of return? Would you like to take that question, sir?
Sure, sure. So, Sakshi, I mean, your question is about, like, I mean, when you invest and what returns or what outcome you can expect from your investment. So basically, in principle, there is no guaranteed return in equity investment. So I mean, like, I mean, you invest some money in stock market today, Like, I mean, buy share of a company like Reliance or TCS or Infosys or any other big company. There is no guarantee that the share price will double from here. It can go down, it can go up, it can happen anything. But because you become owner of it, there is no guarantee or on the returns. Now, let's come to the expectations. So basically, when I said startup investment is a high risk, high return kind of investment, so anybody who invests in startup, they come with a 10x kind of expectation. I mean, when I say 10x over the period of time. So naturally, we have to tone down the expectation to the market reality. So, I mean, if we are like a bigger investor putting like 25, 30 lakh rupees check in a startup, then you can stay in the startup and look for that kind of return. But when you put a smaller check, say 5,000, 10,000 or 50,000 rupees, naturally we have to see, I mean, what is the return as compared to what market other things are giving in the other instrument. So what we set the expectations here, like, I mean, realistic expectations. If you get 2x returns in 12 months, that should be considered as a good return. So like, I mean, you invest 1,000 rupees and it becomes 2,000 in 12 months, that is supposed to be a good return in current scenario. If it becomes 3x, that is like 1,000 becomes 3,000 in 2 years, that is also considered to be a good scenario. And in 3 years, it becomes 4,000, like in 4x, that is also considered as a good scenario for a startup investment in current overall circumstances. So that's what expectation you can keep. But at the same time, there is no guarantee. I mean, some startups can fail, some startups can give good returns. And that's how we suggest and recommend all the investors to put up to 10% of your wealth in startup, and that to spread across multiple startups. So that, I mean, you can diversify your portfolio and get better returns on an average.
Right, and as we know, for as a generic notion for the people who invest into companies and the markets here in India, higher the risk is higher the return. So and all investors are supposed to use their own discretion while investing into any startups. Yeah, and I think we'll go to the next question that we have from Miss Shakina, which is okay. We discussed great thing that Miss Shakina, you have put up this question. We discussed the advantages of investing into a startup. Miss Shakina is asking what are the advantages and disadvantages of investing into startups. Obviously, for everything there can be pros and cons. So it will be great if we can discuss that as well, Sanjay.
But absolutely, again, see advantage and disadvantage in investment. Forget about startup investment. In
Hmm.
investment itself is a personal goal. So I mean, why we invest? Why
Hmm.
anybody invest money? To grow the money. We earn money by our profession or any other way we earn, and we invest so that our money works for our growth. So the money is invested to get more returns. That's the advantage. And in startup, as you rightly said, it's a high risk, high return investment. So the overall possibilities of getting good returns in startups are high, and that is the advantage of investing in startups. And again, the same thing, disadvantage, like, I mean, what if your investment fails? I mean, your returns will become zero in that specific investment. But that is not disadvantage again, because what I'm suggesting, don't invest in one deal, because that could become a gambling or a lottery ticket kind of investment. Keep investing in whatever budget you have, whatever plan you have in multiple startups on a regular interval. And that's how you can create your portfolio. And this disadvantage is automatically discounted for.
Hmm. Hmm. So I think then diversification is the key. What every investment guru today suggests is that diversification is the key. Now we are coming to the next question, which is a generic question about startups. So I think it will be interesting, not just about startup investment. What level of involvement is required in startup? Is a question from uh, Pro Gamer. So that's an interesting name and interesting question. So
Okay.
let's see if we can take it.
Yeah, thank you. So, I mean, I don't know the real name, but yes, whoever is programmer. Yeah, the question is interesting, but I mean, I think I have to answer this question in two parts. One is
Hmm.
like, what is the involvement of an investor, and what is the involvement of a founder? So when I say involvement of a founder, startup founder, it has to be 100%. When I say 100%, it's 100%. It cannot be 99.99. It has to be 100. So I mean the commitment level should be full 100% in whatever the person is building. The person who is building, he should have 100% confidence, trust on what the thing is doing, and give 100% time and commitment. That is from the founder's point of view. Now talk about investor's point of view. Technically, theoretically, no involvement is required. You have to just give the money, trust your advisors, trust a platform like Growth 91, who is taking care of due diligence and evaluating the initial thing, what is required for a startup to be called as an investable startup. So once that is listed, I mean, you can just see whether that idea or whether that sector, whether that deal it interests you prima facie, just go ahead and invest. Further to that, no involvement is required. Whenever the exit opportunities come, we keep a watch on it. Whenever it is available, we communicate to investor and get it executed. So for after that, technically no time is required for the investor.
Yeah, and we're sure with a platform like Growth 91, everybody's investment is safe and well advised. So that's something you can always expect from people who.
Just to add here, Antim, I mean, again, so when we use was safe, I mean, I'll just want to add one more, just to give a information
Yeah.
here. So how the platform works, so technically, when the investment happens, Growth 91 does not touch any money. So we don't take investors' money.
Right.
So what we have created is like a government authorized trustee we have appointed, a SEBI registered trustee bank is appointed. And for every startup, a separate bank account is opened with the trustee, whoever is listing the funds. So some investor want to invest, say, 5,000, 10,000 or 1 lakh rupees. That amount directly goes to the trustee's account.
Okay.
And let's say the startup wanted to raise 25 lakhs or 50 lakh rupees. When that deal is complete, the full fundraise is completed, we give the details to the trustee that these many people invested. This is the deal. I mean, proposed to be raised, and that is completed. So please close this transaction. So that time, what the trustee does, the trustee transfers that money to startup's account.
Okay.
So technically, Growth 91 does not touch the money. It does not come to the Growth 91's bank account at all.
So can we understand then, for every startup deal that happens, for every startup, there is a unique trustee created to ensure that the transactions and the funding is happened in a legal and proper manner, in a fulfilling manner. So basically, a
Yes.
special purpose vehicle or a trustee is created for every startup that takes investment from Growth 91.
Yeah. So just to correct the wording, so trustee is same. The trustee is appointed who is same. And the trustee creates a separate bank account for every startup deal.
Okay, understood. I think it's fully clear. I hope that question was answered really well from Sanjay. And we'll take the next question from Rugmini, which is, how does the investment affect diversification? If I have to understand your question appropriately, Rugmini, I maybe we'll take it in a way that, how does one understand diversification? I mean, how do you diversify? Usually it's done on the basis of various industries which are doing well. For example, currently healthcare is doing well, or if Web3 or technology is doing well. So you can diversify. We'll hear more from Sanjay here as to how does one diversify. What should be the approach of diversification when you are investing?
No, so it's see. I mean, again, it technically varies from person to person. That's why I'll try to give a broader picture. So basically, any investor who want to invest some, let's say, 100 rupees, depending on their personal choice, they can invest in gold, they can invest in real estate, they can invest in stocks, or in mutual funds. When they invest in stocks, it could be like blue chips or small companies. Mutual fund also, it could be balanced fund, it could be high risk fund or sector specific fund. So they have to distribute that amount. Out of this 100 rupees, what we are suggesting, invest 10 rupees in startups for a better diversification of your portfolio. Now, again, out of this 10 rupees, don't invest all 10 rupees in single startup. At least divide it in 10 so that you can invest in 10 deals. If 10 deals finding is difficult, then at least divide it in 5 and then invest 2 rupees each in 5 different deals and keep repeating that year after year to build a greater portfolio. Because why I said year after year, because what happens every year, certain sector will be in trend depending on situation. So like, when COVID happened, education was in trend. We are giving online education.
Correct.
Then gaming came in trend because many people were playing games and these kind of new things were coming up and growing faster. Health tech is like almost always in a trend. Like, if there are very unique things, they are always in trend. Then fintech is always in trend because finance is going to change. It is required in any business and every business. So any innovation or anything coming up there, that is going to be in trend. So you have to be balancing your portfolio in different sectors, and that's how you can do from your budget allocated for overall startup investment for diversification.
Right. I would again say
And
to all our viewers.
just to add, we have another model also where we have a mutual fund like startup investments. So like, if somebody do not want to individually go and select deals and pick it, we also have a model where we help them buy a basket of startups together. That
All right.
model is also available. That also can be taken care for somebody who want to diversify very well but don't have time to diversify.
Right. So, for example, we see baskets in small case and all, where we can take a particular industry and try and diversify in all the startups in that particular industry. That's fantastic. That's really assuring to know something of this nature is coming into the private equity market. I would again like to say to all our viewers that investing into private equity was never this easy, since mostly investments, and you guys used to invest into stocks through stock exchanges and everything other platforms that we are aware of. Now with growth 91, it has become very easy. And I think to conclude today's session, thank you, Sanjay, for joining us and enlightening us about how startups can enrich themselves by raising funds for whatever purpose, whatever growth activities that they're wanting to focus on at an early stage, and how investors can actually generate a lot of value by investing into startups at the early stage. So when they're startups that they believe in, when they grow, how they can actually succeed in terms of getting very high returns instead of going through stock exchanges and investing into the startups once these startups are listed. So this is a new form of investment, and so it was really fruitful interacting with you. uh, to all the viewers, I would like to repeat that my name is Antim Amlan, and I am a fundraising and private equity expert here at Vakilsearch. And we were connecting with Mr. Sanjay Sarda, who is the founder of Growth 91, which is a private equity investment platform. And as I have said in all our webinars and YouTube live sessions, keep in touch with us and keep connecting with us. We are here as Vakilsearch to help all the startups in India in the startup ecosystem, and help you grow with connecting to all of our partners, all the major hot shots in the industry, and all the major contributors of the startup ecosystem who are trying to generate value for startups and entrepreneurs in India today. And thanks a lot, sir, for joining with us. I hope the session was fruitful for you and will help us help a lot of startups in the country to generate more value. Thank you. Thank you for joining. Any
Yes,
concluding
thank
remarks?
you, Ankit.
Any
No,
concluding
so basically, yeah, so overall, thank you very much, Vakilsearch, and yeah, I think you regularly keep conducting such events for creating awareness in the interest of the general users and investors or any participants of the ecosystem.
right?
So certainly, everybody, knowingly or unknowingly, definitely want to create wealth. Some people are running behind it, but some people are silently have in mind that they want wealth. But I have not found anybody till now in last so many years that who don't want wealth.
That's true.
So getting wealth, naturally you have to keep exploring a lot of new things, new opportunities coming up. and explore it. Usually, what happens, I mean, yeah, everybody must have explored all new opportunities, new segments, whether it's like real estate, Bitcoin, startups, or anything you name it. It comes to large or super rich or people first. Once they explore it, exploit it, then it comes by to the smaller investors. So this is the gap we are trying to bridge and to bring it to smaller investor faster and keep exploring this ecosystem. Maybe you can start with small amount, but just stay connected with the ecosystem so that you keep exploring good deals, good opportunities. And trust me, it is not just investment. Once you connect with like such kind of mindset people, especially startup founders are all crazy people. I mean, they come with all craziest product and ideas in the world. So once you
Hmm.
connect with this kind of people, you'll start seeing change in your day-to-day life as well over the period of time. That's what I have experienced. So don't
That's
take it as an investment only. It's a life-changing thing. I mean, by staying in a right ecosystem at the right time.
Thank you so much for your wise words and your time, Sanjay. If you, as a viewer, if you like this video, please like, share, and subscribe to our channel. If you are an entrepreneur, a startup, or any viewer who wants to know more about legal investments and finance and wealth creation, like Sanjay mentioned, please comment in the comment section, and we'll definitely reach out to you and ensure that you get the right advice. Thank you for joining today's YouTube live webinar with Growth 91 and Vakilsearch. Have a good day. Bye bye.
Thank you. Thank you, everybody.